Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2025, and we're diving into ADM's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ADM, a leader in agricultural supply chain management and nutrition, has just released its Q3 2025 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. ADM reported a revenue of $20.37 billion for the third quarter. How does this compare to their profitability, John?
ADM's revenue of $20.37 billion reflects a slight increase from the previous year. However, their adjusted EPS came in at 92 cents, which is a 16% decrease from last year. Despite this, they managed to achieve a net income of $108 million, supported by an operating profit of $845 million.
What factors contributed to this performance?
The decrease in adjusted EPS is primarily due to lower segment operating profits, particularly in ag services and oilseeds and carbohydrate solutions. However, the nutrition segment showed a strong performance, with a 24% increase in operating profit.
Segment performance analysis. John, can you break down the performance of ADM's key segments?
Sure. The Ag Services and Oilseeds segment reported an operating profit of $379 million, down 21% from last year. This was largely due to a 93% decline in the crushing subsegment, impacted by lower margins and deferred biofuel policies. Carbohydrate Solutions also saw a 26% drop in operating profit, while the nutrition segment was a bright spot with a 24% increase driven by higher margins in human and animal nutrition.
What about the impact of external factors like biofuel policies?
Biofuel policy deferrals have indeed affected demand, particularly in the crushing subsegment. However, ADM is optimistic about future policy clarity, which they expect to provide positive demand signals.
Cash flow and financial health. Let's talk about ADM's cash flow and financial health. How are they managing their finances?
ADM generated a robust operating cash flow of $5.8 billion year-to-date, with $2.1 billion before working capital adjustments. They've also reduced their debt by $1.7 billion, which is a significant step towards strengthening their balance sheet. Their cash reserves stand at $1.235 billion, indicating solid liquidity.
What does this mean for their financial stability?
This strong cash flow and debt reduction enhance ADM's financial flexibility, allowing them to invest in growth opportunities and navigate market uncertainties effectively.
Future outlook and strategic initiatives. Looking ahead, what is ADM's outlook and strategic focus?
ADM has revised its full-year EPS guidance to $3.25-3.50, down from the previous $4, reflecting lower crush margins. They anticipate clarity on biofuel policies and global trade evolution by 2026, which should support future growth. The company continues to focus on portfolio optimization and cost savings.
What did CEO Juan Luciano have to say about their strategy?
CEO Juan Luciano emphasized their progress in areas within their control, such as cost savings and efficient operations. He highlighted ADM's resilience and ability to endure market cycles, supported by their asset network and skilled workforce.
Key takeaways. In summary, ADM's third quarter results reflect a mixed performance with strong cash flow and challenges in certain segments. Their revised guidance and strategic focus on biofuel policy clarity and portfolio optimization are key to their future prospects. Thank you for joining us, John.
Thank you. It's been a pleasure discussing ADM's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on ADM's performance in the comments below.